I'm Matt Bishard in San Francisco for NAREIT's REIT World, our 2018 annual conference. Joining me today is Mike Landy, President and CEO of Monmouth Real Estate Investment Corporation. Mike, thanks for joining us.
My pleasure. Thanks for having me.
Now, Monmouth continues to be active on the acquisition front. Can you talk about what types of deals you're looking for and how pricing is shaping up?
Sure, Matt. We're very selective, specialized in our investment criteria. We invest solely in single-tenant, net lease industrial properties on long-term leases to investment-grade tenants. So we're very, very picky, but we've more than doubled the size of our portfolio since 2013 through the acquisition of buildings leased to FedEx, Jim Beam, Amazon, Berkshire Hathaway's, Shaw Industries. But the pricing, yeah, it's very competitive. Land values are going up. Construction costs are soaring. It's no secret that industrial is a very hot property sector. So you have a lot of capital, strong demand. Price per square foot is now at the highest ever. Cap rates are at the lowest ever, but our spreads are still accretive to our cost of capital, so we're still able to grow. And really our concern is more a long-term one. Our average lease maturity on new deals is about 13 years, so the question becomes, what are these assets going to be worth 10, 15 years from now? And we feel they'll be worth significantly more by then.
Now, Monmouth has built an impressive quarterly streak of posting an occupancy rate above 99%. What are the keys to continuing that track record?
Well, you know, I think that talks to the mission-critical nature of being so selective. Our assets are now in the fourth consecutive year of over 99% occupied. Our tenants are strong companies with growing businesses, and they've invested substantial sums of money automating these facilities. So, you know, just being in our fourth year of 99% occupancy, I think it speaks to the quality of our portfolio and how integral these assets are to our tenant base.
And lastly, there's been a lot of discussion about trade issues and the impact it could have on industrial real estate. What is your take on any potential concerns, and how are you positioning Monmouth in that event?
You know, industrial space, one could say that we don't mind trade deficits, perhaps even prefer trade deficits, because imports require more warehouse, long-term warehouse and distribution space than exports. But I think that kind of misses the bigger picture. Free and fair trade begets more trade, which creates jobs, which is good for the global economy, obviously, and it helps create peace. So the problem becomes when you have an asymmetrical situation, we had with Japan in the late 90s, overt mercantilism, and you see with China today, we have a $300 billion trade deficit. So the global supply chain has a propensity to find balancing forces and move to where trade agreements are more reciprocal. So I think that can take care of itself over time. Additionally, we are now one of the largest producers of natural gas and oil in the world, so we could re-onshore manufacturing jobs, and that's certainly great for Monmouth's portfolio. We're solely domestic-based. But I'm not really concerned that we're going to go backwards into some isolationist type of economy. It's definitely a global market. I think the changes in technology would not allow us to go back to something we experienced in the 30s. It's a global economy going forward.
Mike, thank you so much for joining us.
My pleasure. Thank you.
For more from REIT World 2018, be sure to visit NAREIT's website, REIT.com.